Button, chief currency analyst at ForexLive, joins us now to weigh in on this and some other issues happening globally. But let's start at home here domestically. Adam, we have this call now that the Bank of Canada will not be able to move any higher this year, and they might be done. What does that do to the value of our dollar?
Yeah, a lot of that's been priced in over the past few months, and we saw that dip in the Canadian dollar. And that's coming on soft economic data. It's coming on this shift, really an abrupt U-turn from the Bank of Canada in its messaging. So that's all largely priced in. And in fact, we're seeing about a 16% chance of a cut priced into the markets by the end of this year.
If we actually did get that cut, because at a 16% chance, it's very notable that has crept into the trade, but it's still the minority. If we actually got a cut from the Bank of Canada this year, what would it mean for our currency? Some people have suggested the bank has an agenda for a lower loonie, so perhaps they wouldn't be upset if the loonie went lower.
Yeah, I mean, that there was an idea that it would boost exports significantly when we didn't see that as the Canadian dollar fell from parity back down to 130, and I don't think the Bank of Canada really wants to test that theory again. However, it would be somewhat stimulative. I mean, we could easily fall 5 or 6 cents if the Bank of Canada were to start talking about cutting rates. And it really, there's only a few things holding up the economy. Employment in the last 6 months has been the strongest it's been since 2002 of any 6-month period. But if you look outside of that, people are having a hard time believing that number because consumers are soft, housing is soft, and there are just no real indications of investment in the Canadian economy. So there's really just one pillar holding that up. And if it starts to go, the Bank of Canada can change its mind pretty quickly, and the Canadian dollar will front run that.
Now, the interesting thing about the currency trade when it comes to the Canadian dollar is that there are times when it's pretty clear that we're trading as a petrocurrency, and there are times where we are not. Has the relationship broken off again? Because oil's pretty firm in terms of 2019 terms.
Yeah, it's creeping up. We hit another 4-month high today. I mean, we're at $58 on WTI. The spread with Western Canada is fairly narrow. Now, there are these really thresholds when you get investment in Canadian oil, and that's what the market wants to see. You know, maybe it's above 60 where people start to spend. I think it's closer to 70 where Canadian companies really start putting money to work, or foreign companies start coming into Canada. So I think we still have a lot of work to do before you see that relationship really strengthen, because if you listen to oil companies, they're not ready to put capital to work. They're worried about debt, same as Canadian consumers.
Now, I want to talk about Brexit. We just got another one of those meaningful votes out of the British Parliament. This time they're actually agreeing with Theresa May, saying, okay, let's delay the Brexit. Looks like we're moving the deadline now from March 29th to June 30th, on the caveat that a deal can be reached by next Wednesday. So still a lot of uncertainty around the pound trade.
Oh, it's unbelievable. We had two very important votes today. One was an amendment, and it came in at 314 to 312. So really, if one vote swung, it would have been down to the speaker. And that was to take control of the legislative agenda. And if Theresa May would have lost that, it would have really been another slap in the face to her government and the kind of tenuous control she had. Then we got more of an overwhelming vote, as you mentioned earlier, to extend Brexit. But the tail risk here is that the EU doesn't want the extension of Brexit. They've been firm in saying you have to give us a reason to extend this. They need unanimity to make it happen. So that's all 27 countries in the EU have to agree to extend it for 3 months. And there's a chance that somebody, Lithuania has talked about it, grandstanding and holding this up and saying, you know what, either cancel this altogether and restart the clock at 2 years, or accept the deal that's on the table, because this is as good as it's going to get. So it's time to make a decision and end this uncertainty. And ultimately, I think that would, obviously in the short term, create a tremendous amount of uncertainty and hurt the pound. But if they can get that deal through by squeezing, then the pound has a lot of upside. And I think eventually this deal can get through, even though May lost the vote pretty badly earlier this week. It's only going to take 75 votes to switch, and it's possible.
All right, Adam, as always, great to get your insight. Thanks for catching up on the day's news with us.
Thanks, Greg.
That was Adam Button. He's chief currency analyst at ForexLive.